Okay, we're getting started. Good evening, folks. This is Prakash Narayan. I'm in the executive team of ATEA, and we were getting a lot of questions and concerns from people to help understand the CARES Act. So we thought we should pull together a panel of experts to help us understand and provide their perspectives and provide us resources uh, from their interpretations and perspectives of the CARES Act. So I should clarify that these are their personal views. So they take it for what it's worth. These are professionals, chartered accountants and lawyers, and I'm going to hand the control over to Lena Kanapan, who will one introduce ATEA and also introduce the panelists. So the format's going to be first of all, everyone is muted so that we can try and complete this in 1 hour. If you have a question in the Q&A panel, raise the question. And by the way, this is being recorded, so we'll post the link to this so others who could not join at this time have access to the recording as well. So with that, I'll hand it over to Lena, and he will talk about ATEA in general for 30 seconds and then hand it over to the panelists. Go ahead, Lena.
Yeah. Thank you, Prakash. Hope everyone and your family are staying safe and healthy these crazy times. So I'll start off. I'm the co-founder of ATEA, American Tamil Entrepreneurs Association, which was founded in 2016. It's a non-profit organization, fostering entrepreneurship among members of, both Tamil community as well as people beyond work outside of U.S. as well. It's a non-profit 501c3 organization. Our tagline is Link, Learn, and Lead. And the organization was founded by successful entrepreneurs, corporate executives, investors, and academicians who want to give back to the community and help companies start businesses as well as take help to grow businesses. ATEA launched a digital accelerator last year, has been supported by the Tamil Nadu government. Industry Guidance Bureau came out and announced special grants to qualified startups through ATEA organization. So today we take this opportunity to really cover an important topic for many of us, whether you are an individual or a small business owner or a if you have a proprietorship or a S corporation, you will find this session very useful. I will introduce the panelists and have an opportunity for them to talk about this whole CARES Act, as well as give their perspectives. And then after the panelists speak, we'll open it up for Q&A, general Q&A. First on the list is Nilesh. Nilesh actually is on the board of Chartered Accountants of India's ICAI San Francisco chapter. He's also a certified chartered accountant. And maybe Nilesh will go first, introducing briefly about his business and the kind of things, activities that he does, and then go into his perspectives. Go ahead, Nilesh.
Hi, good evening, folks. Thank you, Prakash and Lena, for giving me an opportunity to address your organization. I've been a part of ATI events many times in the past couple of years, but this is the first virtual event, so best of luck to all of you. I'm sure this will be a great format in the times to come. Before I delve deeper into the CARES Act, I want to send my sincerest wishes for good health and safety of each and every person who's participating on the call. May Almighty keep all of us safe, is my sincerest wish. Uh, a couple of sentences about me. I am a chartered accountant by training, an investor by passion, financial advisor by license, and an entrepreneur at heart. I wear many hats, and today I am trying to share my perspective, both as a professional as well as an investor who's active in the markets. Uh, Jumping down straight into what's the subject of today's session, the CARES Act, or what is known as the Coronavirus Aid, Relief and Economic Security Act, CARES. So, the unprecedented shutdown of the United States economy has prompted an unprecedented policy response. CARES Act is one of the responses that the US federal government has come up with. It's a big response, $2.2 trillion. It's the single biggest response by the government for any crisis till now. Having said that, I would like to remind everybody that this is just one of the responses. It is actually the phase three of the response by the federal government, and many more initiatives are expected, are in the pipeline to support the economy in these challenging times. For example, President Trump has already spoken about $1 trillion plus infrastructure support. So, there is something for everybody in the CARES Act, but if you feel there is something missing, it's likely to come very soon. Without further ado, let me jump into what I think are the most relevant parts of the CARES Act. Uh, uh, See, you must remember what is the CARES Act. The primary purpose of the CARES Act is to put money in the hands of the people, to remonetize every section of the society, whether it is an individual, whether it is an unemployed professional, or a mortgage owner, or a student loan holder, or a small business, or an airlines, irrespective of what section of the society or the economy you represent, the CARES Act tries to put money in your hands. So, with that objective in mind, I'd like to talk about only two sections, individuals and small businesses, because I think that is what is relevant for the audience on the call today. There is lots that can be spoken about, but we will restrict ourselves in this call. Coming to individuals, the first and foremost is a generous expansion of unemployment insurance. Around $250 billion are expected to be paid by the federal government to provide an extra $600 per week per individual on top of the state's payouts. And the interesting thing about this unemployment insurance is that it extends the period by 13 weeks, and more importantly, expands the eligibility to gig workers, self-employed people, and interestingly, voluntary job leavers for COVID-19 reasons. This is probably one of the main reasons why the unemployment numbers shot up to almost 10 million over the last few days. This is an important initiative by the CARES Act. The second important initiative for the individuals in the CARES Act is the recovery rebates. Around $290 billion of direct financial assistance, direct cash assistance, is contemplated by the federal government. $1,200 would be provided to individuals making less than $75,000, and similarly, $2,400 to couples making less than $150,000. There is a phase out of $99,000 for individuals and $198,000 for couples. In addition, there is also a $500 cash assistance per qualified child. So this is a very important and a significant initiative by the government, and it is expected that there would be many such more support, if so required, in the times to come. The third important initiative for individuals are the support for student loans deferrals and mortgage payment deferrals. These are also important benefits which will help individuals to conserve cash. Before I jump into businesses, I'd like to talk about one very important feature is the tax favored withdrawals from retirement plans. So if you have an IRA or a retirement plan, you can withdraw up to $100,000 during 2020 without the 10% early withdrawal penalty. There are a certain eligibility conditions to be met, but those are pretty broad enough, which would allow most people to be able to avail of that. The withdrawal, of course, has to be paid back into the plan or the IRA within a 3-year period. Uh, these I would think are the most important benefits for individuals under the CARES Act. Uh, I would now like to jump on to the business side of it. The kingpin of the business support is through the PPP Act, which is known as the Payroll Protection Act, which is a $350 billion assistance program. But I'll not talk much about it. I'd let my fellow panelists delve deeper into it. And I'll instead talk about three other important points that the CARES Act provides for small businesses. The first is the delay in payment of payroll taxes. So employers and self-employed individuals can now defer 6.2% employer portion of their social security taxes, and they have lots of time to pay that. 50% needs to be paid by December 2021, and then the balance 50% by December 2022. This can mean a significant amount of cash left in the hands of the business. The second important feature of the CARES Act for businesses is the employee retention tax credit. Certain employers would be eligible for a tax credit against their employment tax equal to 50% of qualified wages. For a business to become eligible under this program, it has to be significantly shut down because of the COVID, or ought to have seen a significant drop in revenues because of the entire COVID related shutdown. The third important benefit under the CARES Act for business is the modification in the net operating losses arrangement. Now, this is very interesting because what it does is that it relaxes the limitations on a company's use of losses. Losses for which are booked in 2018, 19, and 2020 can now be carried back for 5 years without regard to a taxable income limitations. So thus, what it means is that current year's losses can fully offset prior income, which is significant because in some of these prior years, the tax rates were as high as 35%, whereas the current tax rate is 21%. This is one more way in which the businesses are likely to benefit because of the CARES Act. There are other interesting benefits like increase in the limit of business interest expenses, where now the limit has been increased from 30% to a 50% reduction. But at this stage, I think I will stop and hand over the floor to my fellow panelist, Anil Advani, to talk about the PPP program, which I'm sure most of you are very keen to know more about.
Yeah.
Over to you, Lena and Anil.
Yes. Thank you, Nilesh. Thank you for those very useful views. Next is Anil Advani, Mr. Anil Advani, who is a startup lawyer, angel investor, and mentor for early stage founders in Silicon Valley. Anil has represented over 3,000 startups, angels, founders, have been involved in almost 500 financing and M&A transactions, valued at over $3 billion in aggregate. Anil has also made over 25 plus angel investments in his career. He is licensed to practice law in California, New York, and India. Has represented US-based investors and companies in investments and acquisitions. In his past life, he was with law firms such as Cooley, Godward, and Orrick Harrington. So Anil, the floor is yours. Please go ahead.
Thank you, Lena, for that introduction, and Nilesh for that excellent overview. And I guess I'll dive right into the content part of it. So Nilesh has covered sort of, on the personal level and also the small businesses outside of the CARES Act and the SPA loans. The CARES Act and the SPA loans provide a very significant opportunity for businesses to, take advantage of what the federal government has allocated, the $2 trillion that I'm sure everyone's heard about. And, we as a law firm are actually we have applied for some of the loans, we're applying for parts of that. As you can imagine, many of our clients are, asking, and we're on the phone for the last 2 weeks, getting information, putting the resources together. I'm going to invite my partner, Chris, who's graciously agreed to join. And he has his practice, he is leading the efforts, and he can provide an overview of the two primary kinds of loans. And I think if you have time at the end for Q&A, he can talk about the specifics, but the overview and summary is going to be very helpful. We also have a memo that we've drafted and some of the materials, PowerPoint presentation, tables that we can share with the audience through Prakash at the end or in subsequent sort of time. But with that, I'm going to ask Chris to come over and sort of give an overview of the two main types of loans, what's covered, and the processes involved.
Yeah. Yes. Thank you, Chris. I'll take a couple of seconds to introduce you, Chris. Chris Rasmussen. First of all, thank you to you and the other panelists for accepting to be on this in this session on a very, very short notice, less than 24 hours. Thank you so much. Chris is an experienced corporate attorney with over 40 years of experience in telecommunications and technology industry. He specializes in commercial, trademark, and privacy law. Although his focus is on startup and early stage companies, he also provides advice and counsel for later stage companies as well. He was an in-house counsel for AT&T, focusing on commercial transactions, telecommunications for over 30 years. And I think with that, Chris, nice to have you here, and look forward to listen to you.
Well, thank you for that introduction. That's very nice. I have been practicing law now almost 46 years, and time flies when you're having fun. I thought that it's important to understand kind of the overarching purpose of each of these loan packages. And on the one hand, we have what's known as the emergency loan package. That's been around for a while, but it was enhanced under CARS. The purpose of that, and I say it fairly briefly, is to help companies survive during the pandemic. It's a $2 million max loan. Interest rate is at 3.75%. It's a 30-year loan. All of it is to be paid back to the government. It is government guaranteed, but there may be some personal guarantees required with respect to that. The other loan, which is we've called it the franchise protection loan, that loan is up to $10 million. It's being administered through banks who've agreed to participate with the SBA in the loan package. The first date for applying for that loan is tomorrow. The actual application package came out yesterday, and it's still in a state of flux. But the purpose of the franchise loan is to protect employees. Monies will be used by the company to pay salaries and wages and other wage-related expenses like rent, and mortgage and what have you. The loan itself is based on average payroll cost over the last 12 months. And it's a relatively simple calculation. You just take your total payroll-related costs for the year. You deduct from that any salaries or wages above $100,000. So the cap is at $100,000 per individual for wage, and then you divide it by 12. So you take your total wage, take out the 100,000, the amounts above 100,000, divided it by 12, and it's called the average wage-related cost or payroll cost. That's one number that you have to put into the application, but it's along with the number of employees is there's only one other number that goes in the initial application, and that is the amount of the loan itself, which is 2 times your calculated average payroll cost. So 2.5 times. So if your monthly average payroll is $100,000 cost, then the loan's going to be for $250,000. Relatively simple, and most of that loan will be forgiven if the money from the loan or the proceeds of the loan are used to pay salaries and wages and salary related or payroll related costs. On the other hand, under the original, the emergency loan, we don't yet know how it's going to be calculated. But what we do know in the application itself, there are 2 numbers that are required. One is your annual revenues for the year ending December 31st, 2019, and the second number is your expenses incurred in the year 2019. Those are the only 2 numbers that are in it, and I haven't been able to get an explanation. I called the SBA a number of different times as to how they're going to then take those 2 numbers and calculate the loan amount. But nevertheless, they intend to do so, and they intend to do it very quickly. When you file for both of these loans, it is probable that you're going to be asked to file additional financial information. For sure, with respect to any 20% owner, that 20% owner is going to have to be identified, and that 20% owner is going to have to file a personal financial statement. At least we think that's the case. We think also you're going to be required, at least with respect to the emergency loan, you're going to be required to submit your most recent federal tax return. And we think you're also going to have to be required to file a schedule of liability. And with that, and with the 2 numbers in the original application, the SBA is going to calculate a loan amount, and we'll see how that flies. The one thing I should say about the second loan, and it's something that's been clarified very recently, yesterday. The application itself says if it asks you to identify all of the 20% owners, and it then asks the question, are these 20% owners U.S. residents?
Hey, Chris, you're coming in and out. Can you? Yeah, we could not hear what you last said clearly.
Okay, so
it's better now.
On the second loan, on the franchise or the payroll loan, the application now asks for you to list your 20% owners. And then it says, are each of these 20% owners U.S. residents? And then it says, if not, then the loan won't be granted. So there's a foreign ownership restriction on the second loan. Even though the act itself is silent with respect to foreign ownership, with respect to both the first loan, the emergency loan, and this loan, but the application itself for the second loan, the franchise protection loan, has a foreign ownership restriction. The other thing, the other thing I could talk about is what everybody's been worried about, called the affiliation rules. And the affiliation rules are applied to determine the 500 cap, employee cap. And if you have an affiliate, if a borrower or an applicant has an affiliate, that affiliate's employee count will be added to your count to determine the 500 cap. It's important because there's combination of affiliates. For sure, anyone who owns 50% of the applicant is an affiliate. That's absolutely clear. The other criteria with respect to an affiliate is, does a shareholder have control over the operations of the business? And if it does, then that shareholder is considered a control shareholder, and that shareholder's employees will be added to the borrower's employee count for the purposes of calculating the 500 cap. But what's even more disconcerting is that if a shareholder is an affiliate, either through the 50% rule or through the control rule, if they own or control other companies, then the borrower is considered to be an affiliate not only of the shareholder, but of the other companies that the shareholder owns or controls. So there's a combination, and the employees of those other companies are used for the purposes of calculating the 500 person cap. Now,
Chris, you've kind of gone fading out again. Sorry.
Okay, I'm trying to speak as close as I can to this.
It's better now.
There is some good news, and we've been told today that it's likely that the SBA affiliation rules will no longer be applied to these loans. I don't have complete or total confirmation of that, and maybe some of the other panelists have heard or have more definitive information on that than I have, but it sounds like it's going to go through reasonably soon, within the next day or two. That's about all I have on kind of the details of the two loans, and then I'll turn it back to the moderator.
Yeah. Thank you, Chris and Anil, for your valuable insights. These programs. I think we are ready to start the Q&A. I would encourage audience, if you're interested in posting a question, go to the Q&A section of the Zoho platform and start typing in your question. When you type your questions, please include your first name as well as the city or state you're from. That would really be helpful. We have already received several questions here, so I will be filtering and presenting these questions to if it's a generic question, I'll post it to the panel. If it's specific to a panelist, then I'll call out the panelist name. So let me start with a simple one. Do I have to actually be sick or quarantined or have any other impact from COVID-19 to qualify for payment relief? This is for Nilesh.
Yeah. So as far as the recovery rebate is concerned, is going to be made to everybody. There is no, it's going to be automatically deposited in your account, and there is no process that you need to do at your end to determine your eligibility. If you've been a taxpayer, you would get that money.
Thank you. See, the next question comes from Neeraj of San Jose. Are college-going dependent students 18 plus eligible for any of these benefits? Let's say a family of 4 with 2 college students will get only $2,400. Is that right? That's a Neeraj question.
Yes, he is right. Older children and adult dependents cannot get the $500 child credit. The child tax credit is available only for dependent children that are aged 16 or younger.
Okay, thank you. Anil or Chris, do you have any input on that?
I think that I agree with that.
Right.
Okay. Thank you. The next question comes from Johnson. In fact, this current session is open to audience, beyond Silicon Valley. So this question comes from Germantown, Maryland. Johnson from Germantown. In the CARES Act, what are the major business services that the government is looking for besides getting the medical supplies? And he's also asking, please elaborate the tax cut for the businesses.
Yeah, so I guess I'm not sure about the first part of the question. I mean, we described sort of under the CARES Act, the loans that are available for businesses, and they're not specific to any particular industry as such. That's the question. And there are no tax cuts again. There are incentives and loans that we've described and Nilesh has described.
Yeah.
Okay.
Yeah.
And I'd go back kind of to the point that these loans, packages, programs are intended to help companies with less than 500 employees survive during the pandemic year, I guess, and to enable employees to get paid and therefore survive during the pandemic year. And that's really the purpose of these loans and the packages.
Yeah. Okay. The next question comes from Hemant. I'm not sure where he is from, but are any of these CARES benefits applicable to H-1B visa holders who are resident aliens for IRS tax purposes?
Yes, if they are resident aliens, they are eligible. These credits are not available to non-resident aliens. If they have an SSN, because that's a requirement, a social security number requirement, the recovery rebates would be available to them.
Okay. Thanks, Nilesh.
And their salaries count against the the calculations, and if they're employed, which presumably they are as an H-1B, then the company can pay their salaries using these the loan proceeds.
Okay. So the next question is from Rajesh. Again, I don't know where the location. Rajesh is asking, can a business with 1 or 2 employees and few 1099 consultants benefit from these programs?
Anil, you would like to take that?
So this is Chris speaking. Yes, they can. And the second loan package, the payroll protection, probably won't be of much help because 1 or 2 person business is not going to have much of a payroll to calculate the average monthly payroll cost, but they can, and if they do, then the loan will be 2.5 times that size. So there will be some money there. On the other side, depending on the way the loan is calculated, there will be money for companies that are sole proprietorships, that are individually self-owned. Virtually any type of small business that exists will be able to qualify and will be able to get some money from each or either of these loan programs.
Yeah, even if you're an Uber driver, right?
Right.
Yeah. Okay.
And
Thanks.
importantly, I'd like to add to it what I said during this thing, that the unemployment support has been extended to include self-employed and gig workers.
Yeah.
Yeah.
That makes sense. By the way, Rajesh was, I just noticed, he's from Fremont. The next question is from Sundar of Novato, California. Let's say I do have two companies. Can I apply for the loan for both companies?
Yes, but there may be an affiliation between the two companies. That doesn't mean that both companies can apply for it, but for the purposes of the 500 count, if two companies have common ownership, for example, if he's CEO of both companies, the SBA affiliation rules indicate that those companies would be considered affiliates of each other, and so you'd have to use the head count from both to determine the 500 cap. But both companies could apply for each or both of the loans, independent of each other.
Okay. So what if, Chris? What if one business is owned by another business? Let's say one is 100% subsidiary of another business.
I think the answer to that is yes, too, if the two companies are U.S. companies and both companies are operating as independent companies. Now, if the parent company absolutely controls the second company, then there would be an affiliation issue there as well.
Okay. Thank you. The next is Raghu of Milwaukee. What are the expenses that can be deducted towards payroll protection program?
Salaries, wages, rents, mortgages. That's under the second loan.
I think that, Chris, the question is for the payroll protection, so not the emergency loan.
Yeah, no, that's what I was saying. You can use it to pay. You can pay wages and salaries. You can use it to pay rents. You can use it to pay mortgages. And there are a couple other what they call COVID-19 related expenses.
Okay. And also any healthcare and life insurance. Yeah.
Yes, and yeah.
I'd like to add one thing to that, is that when that loan is forgiven, the non-payroll costs cannot be more than 25% of the forgiven amount. So that's something which one need to keep cognizant about.
Right. I agree with that.
Yeah.
Okay. Yeah. Thank you. The next question comes from Murali Jambu from Santa Clara, from South Bay, in Silicon Valley. He wants to know if a startup company is also going to be benefited in terms of funding. Probably it's a generic question for startups.
Well, it depends upon when it was in existence, right?
Right. It's got to be in existence before February 15th of this year for the payroll loan.
Okay.
And the leases and the rents that he's claiming all ought to have been in place prior to February 15. So you cannot sign an obligation today and then claim benefit under it. It should be pre-existing on April 15th. Most of the things, I think, everything has to be before February 15th, if I'm not mistaken.
Yeah, no, you're right. Those types of payments or expenses have to have been incurred prior to February 15th.
Yeah.
So Murli Jambu was asking this question on behalf of his startup, SwirePay, a pay portal. That's the name of the company. Okay, the next question is Arun from California regarding payroll protection. Do the non-payroll expenses have to be in 2019, or can those be in 2020, or after the loan is approved?
There's an 8-week period after the loan is approved, and expenses that are incurred in that 8-week period will be forgiven if they're legitimately dependent on the pandemic. So expenses that are incurred after the loan is given can be paid for out of the loan proceeds. Obviously, the salary expense itself is the most important.
But again, the forgiveness period is only 8 weeks from the date of the loan. So it's not like a complete free ride. One has to remember that.
Right. 8 weeks from the date of the loan.
Yeah. It's very finite.
Correct. Yeah.
Not to say that the government may not change it and may not come up with something else, but as things stand right now, it's that 8-week window, and that's what you need to plan for.
Thank you. Again, I think there's another question regarding kind of same topic. This is Raghu. Are there any reliefs for public service loan forgiveness program for physicians?
I didn't get that.
I didn't hear the question. I'm sorry.
Yeah. The question is, he's checking whether there are any reliefs for physicians through this forgiveness program. Loan program.
Well, student loan forgiveness is one element which could be relevant.
I think he's probably asking the question from a healthcare worker perspective. A doctor, a physician perspective.
Well, if the physician has a loan, then obviously as a small business, his clinic or his facility can apply for support under the PPP program or the other program. But as far as I know, there is nothing specifically just for the healthcare sector in terms of maybe there is something that comes in the infrastructure program later on, but as things stand right now, I'm not aware of it. Anil, if you know something.
No, I'll defer to Chris to confirm. Yeah.
No, Anil, I'll take that. I don't think so. One thing I should point out is we've gotten a tremendous number of inquiries from doctors and dentists, small offices, about their eligibility for these loan packages. And they are.
Okay.
They are eligible if they otherwise meet the criteria.
Okay. Thank you. The next question comes from Krishna. His question is, what is the benefit for someone who is independent contractor who is on 1099? I remember, I think you answered this question earlier, but if you would like to repeat, Nilesh probably.
Sure. What I was referring to is the generous expansion of unemployment insurance will include voluntary job leavers, gig workers, and self-employed people. So that is one of the benefits for gig workers in the program.
If the independent contractor has been relying on contracts with companies to pay whatever type of contracting work they've done, and that work dries up because of the pandemic, then they would be eligible to get either or both of the loans. As an individual or as a small business or a sole proprietorship.
Yeah. Thank you, Chris and Nilesh. The next question comes from Kiran of Fremont. Kiran is saying, I'm a resident alien. I have a California registered LLC that I started 2 years ago, fully self-funded. All my employees are based in India. I do not run any payroll here. Is my business eligible for any type of loan under this act?
Well, they wouldn't be eligible for the payroll protection loan. They might be eligible for a for the emergency loan.
Okay. But he as a owner of that company, he can still claim his salary, right, as part
Yes,
of payroll.
exactly. Well, yes, he could if he's paying himself a salary.
Yeah. Okay. And it should be existing. I mean, he already says it's started 2 years ago, so he has the eligibility. Okay. Okay. The next question is Ashok from California, claiming the unemployment benefit for the green card holders or a H-1B holder. Will it have any impact during citizenship?
That's not a question that I really know.
Yeah.
What happens
Okay.
on the immigration side, frankly.
Yeah, I don't think anyone's obviously thought through something like that at this time, but it's right. I mean, it's more appropriate for an immigration lawyer to confirm the financial implications on the immigration applications.
28 Democrat representatives sent a letter today to the Secretary of Homeland Security saying that they are assuming that people to take advantage of these programs who are immigrants or undocumented will not suffer a consequence of the rule that says you can't take government subsidies while pending your immigration hearing and status. So my suspicion is the answer is they can take advantage of it, and they're not going to suffer any consequences.
Yeah. Thank you, Chris.
He's probably referring to the public charge rule and what is included in the definition of the public charge, the assistance. So I think Chris is right that most probably this will not be included in those public charge definition. However, it's best that he consults the latest from an immigration lawyer.
Yeah. Okay. Thank you. I'm doing a time check. We have probably about 10 more minutes. We have more questions coming in. I'll pick the best ones. The next one is from Joyce Amalraj of Pennsylvania. I am a restaurant owner in PA, Pennsylvania. So what benefits can I expect? Please let me know.
I'd say apply for the loans because you'll get a loan if you otherwise meet the criteria. Less than 500 employees. For the purposes of headcount, restaurants are treated somewhat differently. You don't add up all of the employees at each of the commonly owned restaurant. You do it on a restaurant by restaurant basis.
Yeah. Thank you. There's another question from Hemant of Fremont. Can I withdraw 401k also penalty tax free?
Yes. Hello.
Yeah.
Hello.
Yes. Yes, Nilesh. Yeah, thank you.
Wait, just saying, sorry. So Nilesh is saying that because of COVID-19, I can withdraw from 401k tax penalty free?
I'm saying withdrawals up to $100,000 during 2020 without the 10% early withdrawal penalty for those who are under 59 and a half. And what you need to identify is that either you, your spouse, or dependent have to be diagnosed with COVID-19, or you should have experienced certain adverse financial consequences. So that's the correct definition. So it's not like a straight withdrawal.
Got it.
Yeah. Okay. Thanks, Nilesh. The next one is from Velankani Raj from, again, Delaware, Pennsylvania. What about renters, please? Can tenants stay in their houses without paying the rent, citing COVID-19 situation as a reason? If so, what can the owners or landlords do? Will the mortgage companies waive the mortgage payments on those investment properties? It's a question from Raj. Chris, you want to respond to that?
I don't think I know enough to be able to respond to that.
Okay.
Yeah, I mean, even I don't know exactly. There is nothing in the CARES Act which talks of mortgage waivers. I mean, at most, banks have been encouraged to defer mortgage payments for some time, but there is nothing in the CARES Act which says that rents will be forgiven.
Yeah. Okay. The next question. This is more for Nilesh, I think, more related to taxes. What about businesses that have filing due dates of May 15? Have their filing and payment deadlines been postponed?
Yes. IRS has, I think, delayed the tax deadline to July 15 to provide further easing to households and small businesses.
Okay. Is that not only for individual tax returns, also for companies, company filings as well?
Yeah.
Okay.
I think those are all the questions.
Yeah, I think those are the mostly the primary set of questions we received so far.
There was one that just came in, Lena. Vinod,
okay.
Dublin.
Yeah, I got it. Is there any property tax relief available for residents who owns homes?
That would probably depend on each county and each state. But from the federal government side, there is a fee, benefit that allows for full deduction of certain costs associated with improving facilities. So that's a very minor aspect to it. But I'm not really aware of property taxes being addressed in the CARES Act.
And in fact, I read in the papers today, Nilesh, that that is not the case. The property taxes that are due on April 10th, and what the newspaper said is that you're still expected to pay your property taxes by April 10th.
Yeah.
On the mortgage side, a lot of mortgage companies have announced that they're going to defer mortgage payments for up to 6 months.
Yeah. Yeah. Thank you. I think it's been really great. Can we have your last set of thoughts so that we're almost 5 minutes away for closure. Maybe we'll start with Nilesh. Your final thoughts for this session?
Yes. I'd like to close by saying two things which I said, but I'd like to repeat. First is that remember that the overall philosophy behind the CARES Act is to remonetize the economy and put cash in the hands of the people. So it's important for each one of you to understand all the provisions and make the most of it. Work with your banker, your CPA, your attorney, whoever you can, to make sure that you are able to leverage these benefits to the maximum extent possible. That's the first thing I'd like to say. And the second thing is that, these are difficult times. I'm sure there'll be more policy responses coming from the government. Please remain engaged and keep the hope and keep the faith. Stay healthy, stay
Thank you.
safe.
Thank you, Nilesh. Anil, you want to go next?
Yes. So go ahead, Prakash.
Yeah, please provide your final closure thoughts for the audience.
No, I agree. I think from my perspective, as I was saying earlier, that the federal government has allocated, lots of money, 2 trillion, as Nilesh was saying. There are other incentives as well. So it's really incumbent upon each of us to really try and take every dollar out of it for our businesses, for the survival of our businesses and homes. And we are here to help. Chris and I have worked very hard. Chris and his team has worked very hard over the last 2 weeks to develop the resources, kept on top of what's needed. We're all here to help because it can get overwhelming, right? In all of this information, different options, processes. So work with your people like us, others, Nilesh, others, so that you can take advantage of all of this. And it will be gone before. The whole purpose is to win elections, right? These are all politicians, so everyone has November timelines. Between now and November is when you can take advantage of it. After that, nobody will care about you. So let's get now.
Sure. How can people how would be able to reach out to you, Anil, in Tesla?
Yeah, I think Prakash can sort of share our email information, and that would be the best way to do this.
Okay.
Yeah,
Thank
even I can also, you can share my contact details as well, or connect with me on LinkedIn, and I'm happy to sort of guide people, not just about the CARES Act, but overall markets, overall financial planning, and various things.
Yeah, thank you. Thank you, Nilesh. I know you are also a EB5 visa expert, right? I used to know.
Yeah, that's one of the things I forgot to mention. Yeah, as I said, I wear many hats. I keep myself busy.
Yeah, thank you. So, Chris, your turn now.
Yeah, I try not to lay people off during these times. Take advantage of the loans that are being made available to you as a small business, so that you can continue to employ the people that you've employed in the past. We're going to make our way through this, but we have to keep people employed, and we've got to keep them with money in their pockets.
Yep. Thank you, Chris, and thank you all the panelists for your valuable time and agreed to come on this session on a very short notice. So I encourage the audience, whether you are an individual or a small business owner, if you have not started preparing to apply for the loan, get ready, and there is a mad rush coming in. I think April 3rd is the date. We've been hearing that lenders will start taking the application. So good luck to everyone. And absolutely, it's been a fantastic session at these difficult times. And as I said in the beginning, please stay safe and be healthy. And feel free to reach out to our ATA team, or we will be sharing the contact information, as we said earlier, of these panelists. And I thank again on behalf of ATA Silicon Valley and the ATA National Board for taking some time off at 8 p.m. Pacific time, late in the evening, to be part of this session. And thanks again to the panelists.
Thank you for hosting this.
Thank you.
Okay, good night all.
Yeah.
Take care. Thank you very much.
Good night.
Right.
Stay safe.
Bye.
Stay safe.
Thank you. Bye.
Bye.